Hey, what's up, followers? So last week I didn't create a weekly market outlook for you guys. This week I am, and I honestly, guys, if you're watching this, it did affect my trading going into Monday and Tuesday. Not knowing, being more prepared going into a Monday open, and I noticed that I just wasn't prepared. I slept in, which then I really didn't create a trade, have the ability to really think about what could happen. And when I got to work, I kind of was just doing it real quick on my tablet, but I just really couldn't see it. I didn't have enough time to give mental capacity to actually think about where the trend was going. What was the overall trend, so that I could catch a good entry to trade with the trend, and then to maybe look for a little retracements here and there once price gets to certain areas, right? Look for a retracement, and then there's always a bigger move of the day. I made 3.2 or 3% last week, and I was down 3.8% from the previous week, so I'm only down 0.5% with last week and then the previous week average, or not average, last week and the previous week. If you add them up, I'm only down 0.5%, which is good, guys. Think about it. Like, the name of the game is to survive and just risk just enough to thrive and stay profitable long term, which isn't as easy as it sounds, but it can be worked on and learned through practice. So with that, let's go over to the charts. Alright, so here we go. We have this move that happened last week, and I'm on a 4-hour chart, so this, you can see all in one day's worth of price action. There was this 879 pip move in like a day. And there was another one right here too. 808 pips in one day. So imagine being on the right side of a trade, guys. When one of those days happen, you're definitely putting yourself in a good cushion of profit. So I'm gonna delete some of this stuff here, guys. I want that. Okay, so here's a daily retracement tool, and I had it going to 79% right here. There was a 4-hour bullish order block, which I think price may try to come down, but because it tapped the 70%, I'll try to go to the 79%, didn't fully tap it, but then came back and it tapped this order block and now closed above the 70%. My bias is now bullish. That candle called a shooting star. And when a candle closes like this, that means that there's upward momentum, and we can go down to the 4-hour and see where, right here. Look at that bullish engulfing candle. Now the name of the game is to know when trends change. We had this bearish momentum for the day. We had a little sideways day. But the previous week was bullish, so as people were becoming bullish, price sold off to new lower lows. And what we can see here is on a higher time frame, we can see that there is this channel got broken out of the retest, came back up, couldn't rally, went down, took the liquidity from down here, and it had a lower low. So we're still in a bearish market, guys. It broke this low right here, and what I want to see is a retracement now at this point, because it did print a bullish engulfing candle. That's a strong candle right there. Now how far can this go? Well, I did a Fibonacci retracement tool right here to right here. And I want to see kind of where can price go. And I'm going to erase all this other little fibs down here. These were my entries. I had a winning trade last week, guys. Thursday and Friday put me in profit. I did risk 1.5% on Thursday. I risked 15 lots, which was I was risking 20 pips, which equates to 15 lots to risk 1.5% of the account. That's what really brought me back my account right there in that one trade. It ended up being a really good visible trade idea. So from what I can see is there needs to be a retracement now with this move with this move that just happened. Let me erase that. With this move that just happened, make this a little bigger for you guys. So with this move that just happened, I need to see a little retracement. Last down candle before the move up. So we can actually do an order block, guys, from this point, this last down candle. This is a doji and it's blue, so I'm gonna do this one before it. Okay, I feel like, and then we could do a fib, go down to the hour from this low where it tapped to this high. Now I don't know where price is going right now. Oh, and actually this order block is down here. This one's a little bit more refined, so we can come into this area. It is now a 1 hour bullish order block. Okay, this 4 hour bullish order block already got broken through or rejected off of. So I'm actually just going to erase this. I know it's here. This is all in one area, so I'm going to erase that. So this is where I'm looking to target on Monday. And don't get me wrong, guys, let me go ahead and do something here. Let's move the previous day low, previous day high. Where was that? This was all Friday's price action. It was right here. It didn't really catch the previous day high. Previous day low was right there. And when Asian session starts and continues, there will be a high. We don't know where that's at. I'll leave it right here. 12 a.m. open, which we can come out to the 24, which will be around here somewhere. And then the Asian session low, which will be around wherever this start is, plus, you know, right here. I don't know if that's where Asian session will trade, but if it does, guys, that just means that I'm getting used to that consolidation phase that Asia usually does. Sometimes it'll have a trade-off, but very rare. And then we have our weekly low. This one here. I'm gonna make this a lot smaller. That is the weekly low. And we have a weekly high, which we can see right here. Weekly high is still up there. I moved the weekly low already. Can barely see it. It's against the PDL, but it's behind my screen. So PDL, previous day low, and the weekly low. There it is. Okay. Okay. So we can see those. I'm gonna erase this. Oh no, that's the retracement tool. I'll keep that up for right now. Okay, so from here we can have an analysis to say, hey, you know, there was this bearish momentum on the week, but then there was this push. What we can do is essentially come back into this bearish weekly order block for a move lower, and could target this area right here. So what we can do is come up and then, you know, take the lows eventually and then come down. But as of right now, yeah, that's that. This is that candle right here. That's this one right here. That sideways action. So price does need to come back up, and I don't know how high it will go, but it does need to take some liquidity. And if we're looking for a retracement for a move higher, this could become a 350 pip move. You know, Monday, Tuesday, it may take 2 days to get to this area, but you know, getting in at a right time here for the expansion upwards can give us a good risk to reward. You know, 50 pips, which how convenient is right below that wick. I think 1200 would be a good spot. It's a 1 to 5. One's risky, they can go up to right here, 1250. So I think this is a really good trade idea, guys. Now, this could not come down all the way because there's a big figure level here. So if the entry is at the big figure level, this could turn in, you know, and you wanted a bigger, wider stop, you could have it down here below the 79%, all that, but you still have risk of getting barely tapped out. I would keep it at 50 at max, or 45 around there, just reducing risk, right? Reducing risk. 50 pips. And this is a 1 to 5 risk to reward. If it does come back up all the way to this bearish or daily bearish order block, let's just get that so we know what it is. And even if it doesn't come that high, as a retracement, it could come up to this level, which is a 1 to 3.85 risk to reward, which is still a really good risk to reward. Just trying to catch it off these big figure levels. We see where our targets are, but we could let it ride, you know, a little bit higher. Now this may be the point where it comes back up and wants to, you know, start its ascent back up because of this momentum that it just recently had. So we had this, came down. Once this break of structure starts to happen, it can fly up. Now, if it starts to break this low, then it's probably safe to say that it's going to be bearish for a while into these zones down here. But because of the action that just happened the last couple of weeks, I'm safe to say that it hit off this and it's already starting to reject it, that I'm going to be looking to buy coming in Monday. Okay, now that's our analysis, guys. Let me go down to the hour. Okay, so it's not a really big move I'm looking for, guys, because it could fill this area definitely right here, this imbalance. Let's call it imbalance. That's a huge imbalance, guys. Fair value gap from right here to right there. Jesus, that's a big imbalance. It needs to come fill that. Now, if you guys get in for this trade, I would suggest letting a runner run. If you're getting in at this point right here, guys, if you're getting in at this point, getting in at this point, this has a potential to be the low. So with that being said, let's say that the entry's at the 800 level, 50 pips, it's a good trade, and you hold the whole position until it gets to like this imbalance area, right to the middle of this imbalance area, which lines up with the 79% fib. This is a 1 to 15.67 risk to reward, guys. I would suggest holding up half your, move your stop loss to break even once it starts going up. So you just go like this, and then just let half your trade go. You don't have to secure anything right now. Just let it run, because it has a lot of room to go up. Now if it comes back and stops you out down here, you know, you may want to move your stop loss a little bit up, a couple pips, as it starts getting up into this 12,000 range, right? Because if it starts going up that way, there may be a point where it needs to come back, tap 800 one more time for another move up. But if you guys are getting in right at this area right here, that'll, you know, let's say the price does come down to the 70% fib down here, we enter right here, move our stop to break even, and let's say price does its thing, you know, comes up, down, never really comes back to our entry, you know, let's say that motherfucker goes up, okay, and then wants to do its thing, coming back down for a little while, tap 800 real quick for the expansion up. This is what I think could happen. Come back down, whatever, like it won't come back to that level, right? Like it won't come back to this low right here, because that was the low. So you could let a little runner, or you could let the whole position run on Monday and then just day trade all these moves for the rest of the week. But this is a good entry to just let it hold one position, as it's that whole position's running forward. You're still trading intraday, or not intraday, day trades to up to this level. Now don't get me wrong, guys, that's just up to that level. There still needs to, we still had that expansion coming up this way. So this, if this is the low, it could come all the way up, take these highs, and actually go higher to these highs up here. Take all this liquidity now. So if this is the low, we essentially will have a good entry to hold a full position for a longer term time, which means full risk to reward. You know, it could be a 1 to 30, 40. Let's see how high this can go. Up to this, you know. Oh no. Why did I do that? Let's go back. Okay. Let's say this goes all the way up to these highs up here. Okay, that is now, oh no, I didn't do 50 pips risk. This is now a 1 to 89 risk to reward, guys. This will take a long-term position, but imagine being able to hold a trade, full position, getting in at this moment in time, and letting it run until it hits CP up here at 16,200, let's just say. Which is a 1 to 88 risk to reward. Guys, to me, this makes sense. But how disciplined can one be not to take that out? You know, this is just one trade, and you're accumulating 89%, which could be, you could have 89 day trades, lose them all just to break even, which I doubt. So I don't want to get too overly optimistic, guys. Let's say they just you know, come into this fair value gap that it created. You know, test these highs. That's still a 1 to 20 risk to reward. Just from here to there, you know, I'm gonna be looking for something like that, just so that I can have a good risk to reward. I need to imagine having a 20% trade and just having that cushion, you know, that cushion. So I'm gonna be bullish, guys, for this week. This is now 22 minutes into the weekly market outlook. I hope this was resourceful for you guys. I hope you guys saw some stuff that I look at. Target, I could have went over more fair value gaps. This is a fair value gap right here. There's another one right here. There, it's right there. It's another one. But we have targets now. We know where we're looking at. I know where I'm gonna be looking to enter, which is gonna be around this area. And I'm actually gonna make this a little wider. The session open, stuff like that, so there's some space. With that being said, guys, tap in, be ready, be confident. I'm gonna go back to the thumbnail. So be confident, be true to your word. If your max loss is negative 1%, take it. If you have to take another trade because it's so obvious that you can make back your loss, plus 1%, take it. But if that's it, negative 2% is max, guys, because it takes so much longer to, like, psychologically to have to be like, oh, I gotta win, you know, my loss for one day. I gotta win. I gotta force something. Once you start having to force things, you become wishful. And when you become wishful, you become erratic. And when you become erratic, the anxiety starts to kick up. Once you become anxiety starts to kick up, fear starts to kick in. And once fear starts to kick in, bad decisions start to be made. Why? Because there's less oxygen getting to the brain, because your anxiety, you're holding your breath in and you're breathing fast and not controlling the breathing. So all I would suggest, guys, is have a plan, know your overall trade bias, move your indicators or your lines that show the previous day low, you know, all your highs, lows, order blocks, just keep them refined so that as the week progresses, you're just moving these things on your chart. You're not really having to do a whole markup. You're just following the trade, following the crowd, and you're waiting for entries and exits to be met. And I hope you guys got to see what that looks like from somebody who's gone from 0 not to 100. I'm probably at like 80, 85 right now, guys. My mentor Andre, he's at 100, but I'm right there. I have experience. I know what I'm talking about. I know what it takes to become a long-term consistently profitable day trader. 10 weeks in, and to really focusing on my 1%, my negative 1%, my 0%, and then just having winning trades, I'm up 9.3% after 10 weeks. That's not enough to pass the FTMO challenge. I need 10% in 4 weeks. But all I know is in time, I'm gonna be able to do that. And this may be the week where I catch this trade for a good you know, risk to reward, 1 to 20 risk to reward, just to go back up to those areas, 79%, a 1 to 17 risk to reward, from that imbalance that was created last week at the open. Monday, Tuesday, Wednesday, Thursday, Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, Tuesday's action where it just fell. Okay, guys, have a great day. Have a great weekend. Like, comment, subscribe. Hit that subscribe button. I'm gonna be coming out with all new daily trade updates for this week, so you guys can see how my weekly market outlook lines up to my day trades. Later.